Good evening and welcome to the India Market Review. This is the Sunday, 26th July 2026. The last IMR that we did was exactly 1 month back, and we are back again. So trust you've had a good weekend and you're ready for the coming month and what it holds for all of us. So if you did watch the previous IMR that was done a month back, I hope you took full benefit of what we discussed there. And there were some specific sectors that we mentioned. Let me keep the suspense, where if you had followed the discussion, and you would have seen that in the month following the discussion that we had last month, the IMR, you actually had some plenty good opportunity, even though the market overall was pretty flat and uh, well, a challenge to trade for sure, right? All right, so you should be looking at Nifty on your screen right now as a very general overview. Um, the global markets are definitely taking on a correction. The AI bubble has definitely softened, and well, some people say burst, some people say just a correction. Well, whatever it is, the top is definitely in place. Major global AI stocks are down 10, 20, 30, 40% in the last 2, 3 weeks. And recently, in the last week plus, the US markets and the European markets have also been in a corrective mode. So with that in the background, and we will do a global market review at some point soon, and I'll post that up again. But now we're looking at the Indian markets. So Nifty, as you can see, what you're seeing right now is the daily charts, more or less just gone sideways for the last 2, 3 months. And the last 3, 4 days, at least if you're looking for reasons to explain any of the moves, then well, it's the Middle East crisis, which has erupted again. The ceasefire between US and Iran has been called off for all practical purposes. They are all shooting at each other again, with Trump threatening to do the biggest bombing so far of Iran. Anyhow, uh, and of course, oil prices have gone up, crude oil has increased across the world, and the uncertainty is back at a heightened level. So the Indian markets, you could say, have been correcting along with the global markets, and Indian markets, which were range bound between the long-term moving averages, have broken down on Thursday and Friday. Uh, Friday was a big gap down, about 200 points down, I think. And then it recovered, and it did a pretty good recovery in the second half of Friday. So there is some resilience definitely there, and we're not very far from, say, 23,500 as a support level, tentative, right? And then 23,100 as another support level. So right now we have closed at 23,767. Um, uh, what 600-point correction cannot be ruled out, right? It cannot be ruled out on simply a technical basis, and it would still count as a sideways move. So, in a sense, India remains in a range-bound market with, let's say, 24,400 on the upside versus 23,300 to 23,000 on the lower side. So that's almost a 1,500-point band that we've been trading in for the last 3 to 4 months. Um, how do we go from here? Well, obviously, consolidations always break down or break out. We'll just have to wait. I'm no oracle at all. And I would have a wait and watch approach, at least overall on the index. But individual sectors and definitely several individual stocks have done very well in the last month, and there are those that will do well in the coming month. Um, as usual, we are not going to be getting into specific stocks, but we will definitely get into specific sectors that you can then, take your research further from. If anybody has any, specific requests or would like to collaborate or get in touch, then, my contact information is on the screen. Uh, I look forward to receiving any information or any connect, and all the best, right? All right. So with that, we jump back in. So Nifty sideways, like I said, reacting to global events, showing some resilience, and range bound, really nothing much to speak about. While we are on the topic of the markets, you have the USD INR, which is now going back to its life highs or life lows rather. 96.96 is the life low. It had come down to 94.35 in June, but we are very well heading back there. And by all intents and purposes, I think 97, 98 is on the cards, and who knows, 9900 maybe by the end of 2026 if things really, uh, you know, at the macro level begin to deteriorate. But 27, a new life low for the USD INR is more or less certain, perhaps next week itself, and then 2750, sorry, 9750, 98 should probably happen pretty quickly, right? Of course, what's also leading up to the depreciation of the rupee this time is that DXY has slightly been strengthening, not really much, from 100.5 to 101.5. That's a 1%, strengthening of the dollar index, but the USD INR has definitely depreciated much more than 1%. Just to put a finer point to it, we've depreciated 2.3%, right? So there is a real depreciation that is happening in the Indian rupee, vis-a-vis the DXY. The fundamental underlying weakness of the fiscal situation, however much we may want to ignore or deny it, is definitely very much in place. It's one thing about the markets that, they don't care about opinion, they don't care about your political views or about your agenda or what you think. They do what they do, and it is what it is, whether you like it or not. We are definitely looking at a um, at not at I think the most optimistic way to put it is we are not in a robust economy. There are a lot of underlying challenges which are there. And I think the most obvious one right now is with what happened in Jantar Mantar in Delhi. The Indian education minister resigned after all the protests. And this is just the beginning of, I think, a youth movement in India, which a lot of people were thinking would not happen, like in the way it has happened in our neighboring countries. But I think it's here to stay, and we can expect a lot of challenges, and upheaval might be a strong word right now, but a lot of events in the coming months and 2-3 years. All right, the political landscape has definitely shifted. That's for sure. And one of the things, the reason I came to that is the underlying unemployment issues, joblessness, lack of economic growth, lack of job related growth, right, is a real issue. Inflation, cost of living issues, and all that, right? Okay, so the Nifty sideways, the USD INR depreciation putting pressure on the Indian rupee, on the Indian economy. Global crude oil imports going to become much more expensive. Of course, crude oil has gone up from $67 a barrel to $90 a barrel. So do Indian fuel prices go up again? Well, that's another thing to keep in mind. The government is going to be very wary of it now, but can't be ruled out if the fiscal situation gets worse. All right. So that's the overall context that the market is in. Now coming to the individual sectors and what we see there. Coming to the bank Nifty as usual, the banking index being the big weight in the Nifty overall, right? So had a good recovery like all other indices and the market itself after the March, April March lows, where the markets bottomed out after the Middle East flare up. Slightly better performing than the Nifty itself in terms of, you can see that the Bank Nifty is still within its long-term moving averages and managing to, hold on to that versus the Nifty has slipped. So banking stocks definitely looking relatively better. And there have been some banking stocks which have made life highs in the last 1 week. So, go have a look. It's interesting. While the index, of course, has not, but the individual banking stocks have. Um, Private bank index, more or less the same as the Nifty bank index itself. And then you have the PSU bank index, which is, this is interesting. The PSU bank index is in definitely some sort of a consolidation. You have a triangle formation here. Those of us who are into technical analysis, right? It's pretty textbook, I would say. This triangle that we are seeing, a symmetrical triangle. And does it break out, break down? Well, again, time will tell. But a symmetrical triangle, pretty textbook. Volume is not textbook. It's not classical, but the price action definitely is. And the Dow theory approach to this is that you just wait for the breakout or breakdown to happen, and then you take your positions. But this is in the PSU bank, right? The private bank index itself is little, I would say, more resilient and definitely no symmetrical triangle here. Not perhaps, there is definitely more strength in the private banks versus the PSU banks, right? Next, coming to just in the order that is there in my watch list, no particular reason, is the CNX IT. And I think if there is two indices that I'm going to like focus on in this IMR, the India Market Review, then IT index is definitely one of them, right? This is, I guess, as good as it comes, and it's perhaps a little easier to see this on the daily chart, right? Let me make it a line chart so that it's easier, right? So this is a pretty good head and shoulder bottom, left shoulder, head, and a right shoulder. And the head and shoulder inside a head and shoulder, right? So this is the head itself is a very small head and shoulder bottom. The uh, head and shoulder of the head is part of the larger head and shoulder. There's a nice downtrend from 39,000 in the last 4 or 5 months. And we have a pretty good neckline at around 29,300, right? So some textbook patterns which are there. Question of it breaking out. And what is definitely noteworthy is that on Friday, when the overall market was pretty weak, the IT index definitely showed a lot of strength. That's a pretty strong bullish candle that you are seeing on the CNX IT, right? So a good move from 28,141 low to a high of 28,800. That's almost a 750-point rise from the low. One of perhaps the strongest performing index on the in terms of recovery on Friday. So you can see already on the watch list on the sector list on the right that you have on Friday only two indices which showed green, right? Or three. Let me I forget the subsectors. So you had the PSU Bank at 0.58% up, CNX IT at 0.8% up, and the CNX Media at 1.8% up. So that's the other index that you want to really be focusing on as far as the coming weeks are concerned, right? So one is IT, and like I said, we're not getting into individual stocks. So um, uh, yeah, sorry, just looking for where that menu was. Um, Good upside, perhaps, if the neckline were to break out. Still, the overhang of the moving average is trending down. And there's also the global overhang of the AI stocks, correcting. The AI issue is definitely not over for sure. right? There's no doubt about that. There are still a lot of surprises that are forthcoming. But we've corrected 40 an individual um, IT company stocks have corrected 50-60%. From even the frontline ones like TCS have corrected 50-60%. And this is like at significant multi-year lows, right? So this is a very long-term monthly chart. I know it's cluttered. I hope you can make sense of it, various markings that I have. This is okay, just to point out a real risk in case you are getting into IT. So while I showed you the head and shoulder bottom in the IT index on the daily, you have a sort of head and shoulder bottom over like a 3-year period, head and shoulder top, sorry, head and shoulder top over a 3-year period on the monthly chart, right? And the measuring implication, as we call it in Dow theory, has not been met. And it is possible that the CNX IT index, India could, from where it is right now at around 28,178, we could still go down to 23,000. That's like about a 20%, 25% further fall in the longer time frame. But that is not obviously a guarantee or something. This is just a this is the nature of the markets. You'll have conflicting information. This could be a place where a bottom is formed for at least some time, or there could be further fall. Just another point to note for candlestick fans is that we had a pretty good hammer formation on the weekly chart 4 weeks back, right? The last week of June. So and then we've recovered pretty nicely from that. So in a sense, not a sense, there's a confirmation candle in the next in the next month, in the next week, sorry. So a lot of positive price action that has happened in the shorter time frame, but the overhang in the longer time frame with the long-term moving average is still going to be pressuring the price down. Then the AI thing, definitely not over, is definitely something to keep in mind. But from a trading perspective, if you are trading, say, with a 1, 2, 3 week time frame, then yeah, I think 5-10% moves in individual IT stocks are on the cards. And look at individual IT setups for where the opportunities are, right? Okay, so this is one strong thing. Like I said in the opening comments, last month the opportunity was in the realty and the pharma space, right? So we had mentioned that last month. If you went into individual stocks in realty and pharma and you're a trader, even as an investor, there were an R opportunities. And now this month presents us with IT. Um, while we are at it, let's look at the media space, which is the other focus index of I guess this IMR. Well, there you have it. I think anybody who is familiar with technical analysis, just it's so clear as to, let me even just take this out, right? Can you see this beautiful, absolutely beautiful textbook head and shoulder bottom, right? Two left shoulders, nice, very classical head, right shoulder, a breakout, a sort of test of the neckline, outer neckline, inner neckline, and a resilient move up. And this is definitely in contrast to many of the other indices that you're seeing, definitely showing resilience after, I think, a few years. Um, and what you also have is good volume that is coming here, even in the head, right? So there's this volume which is making things difficult to watch. Let me take that and zoom that out. So you can see that relatively speaking, there was buying definitely happening on the rising of the head, buying happening on the rising of the right shoulder, and there's a consolidation with the moving averages right now for the last about 1.5 months. And the media stocks could be in a place where they are in a technical setup to move further up, right? Sorry about the left chart's very cluttered because it's I know it's looking very busy and all. It's just that from a long-term perspective, this is a chart from 2006 onwards. Media has really gone nowhere, and you would have lost tremendous value or money if you had been invested in media. But from at least a trading perspective, next 1 or 2, 3 months, if there is an opportunity, perhaps. So from where we are right now at uh, about say 1,500, maybe it even goes to 2,500 here, right? That's almost even if it does, up to say 2,100, you're looking at upside potential of let's see. Uh, Oops, sorry, that's the wrong tool to use. Uh, yeah, but 30, 40, 35, 40%, which is pretty good, right? From any perspective, if you made 30, 40% even in a year, that would be excellent, right? All right. So keep that in mind. A little busy chart, but hey, that's technical analysis for you, right? Okay. So I think, at least as far as I'm concerned, obviously I do this every day. I'm in the markets looking at something or the other. It's Indian markets, global markets, commodity markets. Very interesting stuff happening across the world on many aspects. Nigeria went up 67% last year. I mean, come on. And if you were a global investor, there was a sort of a little indirect opportunity, but you could have made that money. Yeah, sorry for the distraction. Um, yeah, so that's IT and media for you. And let's complete the other places, other sectors, CNX Auto, right? Showing strength, definitely relatively stronger than the overall market, right? And some of the auto stocks made new life highs last week. Some really good sales and results um, have been there. So have a look, and definitely not showing the weakness that the overall market is. Therefore, one more outperforming sector is the IT space. Could be creating new life highs on the IT space in the coming weeks. I think one of the things to look at is big takeoff looks like in EV, two-wheelers and four-wheelers. Um, the one thing that can't not be mentioned is Aether Energy, right? So this is definitely not a recommendation, right? Oh yeah, I forgot to mention in the beginning that nothing here is a recommendation, just a discussion. Loss-making company still, but yeah, there are a lot of these scooters all over the place, and stocks been doing well. So look at the EV space. There's probably opportunity there, and individual auto stocks, especially those with good EV portfolios, are likely to do even better than they have been right now. Okay. Looking at the metal space, that's definitely been weak, right? The metals had a good first quarter of this year, and then it's just not borne out after that. So metals have been correcting. So we've already had 8-10% correction on metals. Uh, Not really showing any signs of reversals. There could be more pain on the metal stocks to come. So would not be in a hurry to be entering those right now. I'll come to the soft goods later. We should really have this. Okay. Looking at realty index. The realty index, like I said, this was last month when we had mentioned it, went up very nicely in the whole of July. So look at the chart. It's from 1st of July. It was at 827, went all the way to 937. So that's like 100 points, right? That's a good 8%. No, more than that, right? For 12% realty, right? And individual realty stocks did much better. Realty index, the story is definitely not over. It's run up quite well, consolidating right now, I would think. And on the weekly chart, if you were to look at it, or okay, even on the monthly chart, I would say, let's take that. I think better from a longer term perspective. You've got this huge consolidation that happened over 2011 to 2020, 7 years, and then there's a good consistent rise. This is a correction that happened, and does reality go up now? This is a bit of a conundrum in if you are a fundamental person, because on the one hand we're talking about the economy sort of not being really robust, but reality is doing well. Well, house prices are going up for whatever reason, easy credit, or there's a lot of money flowing in, global printing, whatever reasons that you want to find. But we are just doing simply technical analysis, and a technical analysis just follows what the chart suggests, or whatever your view is on the chart. So the reality is still having strength, and you would definitely want to track that further. Right. So after making a 12% move in the last 1 month, a bit of a correction took, well, just to explain, so you have a Fibonacci retracement. It took perfect support on a 61.8% retracement of the, oh, sorry, I'm sorry. This is looking at a Fibonacci target up move that is there based on a potential Elliott wave count of this being wave one, wave two, right? A, B, C, or truncated C, if that is it bears out to be true. And then there's a wave three going on, and this is wave one of wave three, two of three, three of three, and then maybe four of three, and then five of three, and then there'll be a bigger correction and then an up move, right? So, but this is over many weeks ahead. So that's reality for you. Looking at the infrastructure index, this is not much going sideways, and it's been going sideways since July of 2025. Really, again, nothing much to write home about. It is, got a sort of a double, triple top. Uh, with a top of 24, a top in 25, and probably going to make a top in 23. What does it do? Does it break out? Do we have an ascending triangle here? Oops, sorry. This is something to, yes, there we go, right? So do we have an ascending triangle on the um, Nifty infrastructure index, and does it break out in the next, maybe towards the end of this year or the next 2 3 months, and then goes up? Who knows? Quite possible. You can't rule it out. It is seems to be setting itself up for such a position, at least technically speaking, right? Uh, then looking at yes, right. Let's look at pharma, and then yeah, so pharma, like I said, oh, it's made a new life high. So individual pharma stocks again doing really well. And on the, where is that? Uh, 30th June. So in 19th of June, look at the run up from there, from 24,200 to 26,200 almost. So almost 2,000 points run up. And I don't think this is over in my view. So Trump announced this 200%, I think, tariff on generics, but that's after 2 years. And the Indian stocks really didn't react much to that. But yeah, pharma looking good. A little overbought in the weekly chart, right? But still can't rule out further up moves that are possible, right? 28,000 on the CNX Pharma is is definitely possible. Looking at FMCG, so FMCG stocks, well, there you have another symmetrical triangle. They have been languishing for, I think, almost 2 3 years now. Really nothing happening in FMCG stocks, and waiting for direction, clearly, that something should happen. Until that direction comes, well, we just wait. ITC has been beaten down quite a bit. The big brother FMCG stock, right? So there, nice recovery. This could be a wave one and a complex wave two, and then we see a wave three, Elliot Wave speaking wise, right? Just happening. Again, just all tentative. Everything is tentative. Everything is just about probabilities, right? No certainties in life, definitely not in the markets. And that's how the game is played. All right. So FMCG directionless, being beaten down. Um, I was going to say like IT. Well, not really, but still price wise, yes, you've got the overhang of the long-term moving averages pressuring that price down. But well, it's there. Not from a trader's perspective, there are definitely better opportunities available. CNX Energy, it's a mixed bag. Electricity, oil and gas, and a lot of things. So this was something we highlighted in one of the previous IMRs, I think last month. Yes, an ascending triangle which has broken out very nicely. Okay, nice breakout move, nice volume breakout move, and now you're having a correction for the last 4 weeks, 4 to 6 weeks on the energy index, and it's quite possible that another up move happen in the next 1 to 2 months on the energy um, stocks, right, on the energy index itself. So breakout clearly happened after one about 14, 15 months of consolidation, right? And then it moves in just 3 weeks from 36,600 to 41,000, right? So that's a good 11, 12% move happening in a month, right? Okay, consolidation on a definitely on a longer time frame in terms of weeks, not days, and potential to move up further. Oil and gas, this is going definitely a mixed bag. ONGC, Oil India going to benefit from higher global crude oil prices, but BPCL, HPCL, and all these others looking to they're going to have to absorb losses for some more time. So play the relevant stocks appropriately. There are some which are bullish and some which are bearish. Then, just in terms of not sectors but thematic, public sector enterprises getting beaten down, right? Though again, this is a beautiful thing about technical analysis. This is the weekly chart. Here you have the breakout, ascending triangle. It went not almost, it went to the life high, made a double top there, and has come back to the support line of that ascending triangle. Does it take support here? And then do we see a move back up on the CPSE index? You will definitely see similar setups on individuals, central public sector enterprise stocks. So have a look. So there could be an opportunity there, definitely. And oh yeah, okay, very interesting. There is definitely ah yucks interfering. Uh-oh. There is, yeah, a bullish divergence on the RSI for, okay, let me just shift this. So I hope you can see it as I'm marking it, a bullish divergence on the daily chart for CPSE, along with uh, it taking support on the resistance, former resistance line, now the support line of that multi-week, no, sorry, multi-month, 1.5 year ascending triangle. So technically, this is definitely a good setup. Hey, notice something else. Okay, do we have, okay, yes. Right, we also have a This is perhaps a falling wedge. Pretty textbook, except that, a textbook move up has not happened. But yeah, this is a falling wedge. And you've got a nice setup there. So there might be some good CPSE opportunities in the coming weeks too, from a trader's perspective, right? So trading, this is a trader's market, not an investor's market, right? Um, Setups which are there, which move 10, 15, 20%, and we just, jump into that. All right. CPSE, public sector enterprises, more or less the same thing. Actually, you don't even know why I'm doing this double study. All right. Uh, MNC, right? MNCs, again, some MNC stocks have done new life highs in the last week or so. And the MNC index has actually made, at least, attempted to make a fresh life high uh, last week or 3 weeks back. This was the high that it made in September 24. And then not on a closing basis, but on an intraday, intra-week basis, it again made a fresh life high. And this was in June 26, right? And hanging around there. So from a weekly perspective, one could argue that this is a sort of flag, though not really textbook at all, very volatile, and with that sort of on the daily chart, this is a nice shooting star formation. You'd be cautious, but still, after a double top formation between 2 years apart, if this top resistance can be taken out, then definitely opportunities on the MNC stock space, right? Great. So that's it. That's the IMR for this week or maybe this month, right? We'll see. So thank you very much. Like I want to emphasize, this is not financial advice. This is just for information, education purposes only. So if you do anything, it's at your own risk. Please do your own due diligence or consult with a properly certified person or knowledgeable person before you take any action on anything discussed here. Uh, just like to say in summary that, yeah, lots of trading opportunities are clearly there. Actually, I haven't seen so many trading opportunities for quite some time in terms of sector wise. I mean, there are quite a few sectors where opportunities are there. And if you were to just take this input for the coming month and look at individual stocks, overall 10, 15, 20%, who knows, for the coming month. So thank you very much. Would love to have your feedback. As again, my information is on the screen. Thank you for your participation. And those of you who watch this regularly, thank you for some of the comments that I get on my WhatsApp and calls that some people make. I look forward to interacting with you again. Thank you, Makari Maka, and have a great month ahead. Or before that, maybe we'll do. Oh yes. We will do market reviews on global markets, on AI stocks, on commodities, especially gold and silver. There are interesting setups happening there too. Right. Bye bye. Thank you.